Good evening to you. My name is Chinemerem Joseph, and I welcome you to another edition of You and the Economy. Driven by his unflagging resolve to ensure that stakeholders across all facets and strata of the Nigerian economy and the public at large are duly kept abreast of significant and game-changing policies and innovations periodically introduced by the Central Bank of Nigeria, CBN, in the discharge of its core mandates. The Governor of the Central Bank of Nigeria, Godwin Emefiele, uses some strategic platforms to achieve that all-important objective. One of such crucial stands adopted by the CBN Governor to engage stakeholders includes the press conferences held to round off the meetings held by the Monetary Policy Committee, MPC, of the CBN, which meets every 2 months, and then the meetings of the Nigeria Bankers Committee. Now, the MPC is the highest policy-making body of the Apex Bank, while the Bankers Committee is the umbrella body comprising the CBN Governor, directors of the Apex Bank, and the chief executives of deposit money banks in the country. At the press briefing, which took place after the curtain was drawn on the 364th edition of the Bankers Committee meeting held recently at the CBN Headquarters in Abuja, where the main kernel of the discussions bordered on how to deepen the Nigerian banking system and broaden the base of the economy through stimulation of non-oil exports. CBN Governor Godwin Emefiele announced new initiatives for Nigeria's foreign exchange market. These initiatives are under the umbrella of a program known as the RT200 FX. In full, that acronym stands for Raise to $200 billion Foreign Exchange Repatriation in Nigeria. But what really does that program stand for? How will it be implemented? And what are its projected gains for the economy of the nation and the well-being of her people? You and the Economy attended the post-meeting press briefing of the 364th Bankers Committee meeting, where the CBN Governor shed light on all these issues. For the explanations he offered, we now X-ray the RT200 FX program. Happy viewing.
One of the critical challenges that the Nigerian economy has been contending with, especially since the introduction of the Structural Adjustment Program (SAP) way back in 1986, is the inadequacy of foreign exchange supplies in relation to demand. This protracted adverse trend has continued to exert intense pressures on the external reserves of the nation and also on the exchange rate of the national currency, the Naira. This is especially so with the exchange rate of the Naira in relation to major international currencies, notably the US dollar, which is the most popular international currency denomination in which payments for imported goods and services into the country are settled. It is no wonder then that successive governments in Nigeria, more especially in the post-SAP era, have been unrelenting in devising channels and developing programs and policies aimed at improving the inflow of foreign exchange into the economy. For the records, there are 4 major sources of foreign exchange inflow, better known as FX, into Nigeria. These are proceeds from crude oil exports, proceeds from non-oil exports, diaspora remittances, and foreign directs/portfolio investments. Unfortunately, available data indicates that all these four sources have been adversely affected by the COVID-19 pandemic. Not only that, experience shows that most of the four sources, particularly proceeds from crude oil exports, have become highly unreliable as sources of FX inflow, due mainly to their susceptibility to pressures from changes triggered externally as a result of global economic developments, which Nigeria has no control over. Indeed, this is one of the overriding reasons why the fortunes of most countries like Nigeria, which depend mainly on crude oil exports for foreign exchange earnings, experience adverse changes and impacts whenever crude oil prices take a dive. To avoid the usual sudden shocks and adjustments that economies which depend largely on proceeds of crude oil exports for the foreign exchange earnings are compelled to endure, and also protect the Nigerian economy against factors that are beyond its control, it has become imperative for the CBN to focus on and evolve strategies that can help the country achieve more stable and sustainable inflows of foreign exchange. After studying the best practices in some other economies that share the same fate as Nigeria, but have successfully navigated their ways out of the over-reliance on the export of crude oil as the major source of earning their foreign exchange, the CBN decided to introduce the RT200 FX program, which, as you heard earlier, stands for Race to $200 billion in foreign exchange repatriation. The decision to introduce the RT200 FX program was taken by the Apex Bank after careful consideration of the available options and wide consultations with the banking community. The program came into immediate effect after it was announced by CBN Governor Godwin Emefiele at the press briefing held to round off the 364th edition of Bankers Committee meeting on Thursday, February 10, 2022.
The RT200 FX program is a set of policies, plans and programs for non-oil exports that will enable us attain a lofty yet attainable goal of $200 billion in FX repatriation exclusively from non-oil exports over the next 3 to 5 years. Let me emphasize that under this arrangement, loans to companies wishing to expand or build new plants that will generate verifiable export proceeds for the economy shall remain at 5% per annum for 10 years loan, inclusive of 2 years moratorium.
The RT200 program has the following 5 key anchors: Value-Adding Exports Facility, Non-Oil Commodities Expansion Facility, Non-Oil FX Rebate Scheme, Dedicated Non-Oil Export Terminal, and Biannual Non-Oil Export Summit. The Value-Adding Exports Facility will provide concessionary and long-term funding for business operators who are interested in expanding existing plants or building brand new ones for the sole purpose of adding significant value to Nigeria's non-oil commodities before exporting same. CBN Governor Godwin Emefiele explains the significance of this anchor of the RT200 FX program.
This is important because the export of primary unprocessed commodities does not yield much in foreign exchange. In Nigeria today, we produce about 770,000 metric tons of sesame seed, cashew, and cocoa. Of this number, about 12,000 metric tons are consumed locally and 758,000 metric tons are exported. The unfortunate thing, though, is that out of the 758,000 metric tons that are exported annually, only 16.8% is processed. The rest are exported as raw sesame, raw cashew, and raw cocoa, thereby giving Nigerian farmers an infinitesimal part of the value chain in these products. Given these alarming disparities between exporters of raw commodities and exporters of semi-finished or finished products, we believe that the value-adding export facility is a first step to getting back some of this foreign exchange that we rightly deserve. Indeed, we expect that this facility will also accommodate the demand of our youth population who are already adding value in using e-commerce and online methods for the provision and export of software, financial services, financial technology, Nigerian fashion and attires, and the likes. As long as these exports are captured from NXP and the FX proceeds are repatriated and verifiable by the CBN, we will accommodate such businesses under this facility.
The non-oil commodities expansion facility component of the RT200 FX program is like the value-adding exports facility, a concessionary facility designed to significantly boost local production of exportable commodities. The facility is packaged to ensure that expanded and new factories that are financed by the value-adding exports facility are not starved of inputs of raw commodities in their production cycle. It is believed that generating a massive boost in the production of such commodities will also moderate their prices, so that the expected increase in demand for them does not become a pressure point for aggregate prices in the market. CBN Governor Godwin Emefiele speaks on what the Apex Bank intends to do to maximize the potentials and impact of the facility.
In order to maximize the potentials and impact of this facility, we will replicate what other successful export-based economies have done by first prioritizing and targeting certain commodities. We will create a geographic prioritization of crops across the country to achieve production efficiencies through the development of special areas that will cater to specific commodities.
The non-oil FX rebate scheme, as an anchor of the RT200 FX program, is a special local currency rebate scheme for non-oil exporters of semi-finished and finished produce. Beneficiaries are required to produce verifiable evidence of export proceeds repatriation sold directly into the import and export window (I&E) of the export market to boost liquidity in the market. It is similar to the Naira for Dollar scheme of the CBN, which has helped boost remittances, which previously stood at $6 million per week, to over $100 million per week. The CBN shall establish the modalities for granting a rebate for every dollar of non-oil exports proceeds that an exporter sells into the market, not meant to fund the exporter's own operations, but rather for the benefit of the other FX users. The rebate scheme took off with immediate effect, and here is how the rebate granted will be worked out.
Our plan is to graduate the percentage of the rebates depending on the level of value addition into the product being exported.
The construction/establishment of a dedicated non-oil export terminal is an anchor of the RT200 program, introduced in recognition of the perennial problems of port congestion cited by exporters as a major impediment to improved operations and foreign exchange earnings. Available records indicate that Nigeria loses about $14.2 billion annually due to congestion at our major seaports. Indeed, so disturbing and debilitating is the challenge of port congestion in Nigeria that reports in the international media have it that while it costs only $3,500 to ship a 40-feet container from China to Lagos, which is a distance of 22,000 kilometers, moving the same container from port to mainland Lagos, a distance of only 12 kilometers, could cost as much as $4,000. To actualize the dedicated non-oil export terminal anchor of the RT200 FX program, the Bankers Committee, which members are partnering with the CBN to implement the new initiative, plans that between February and May 2022, it shall collect and analyze detailed proposals from interested state governments in order to decide which one it can partner with. Under the proposed partnership, The Bankers Committee will be arranging a significant part of the financing that will be needed for the proposed port, while the responsibility of the selected state government will be clearly spelled out. CBN Governor Godwin Emefiele speaks further on why the construction of a dedicated non-oil export terminal was deemed necessary as the key element of this anchor of the RT200 FX program.
During our stakeholder engagement with the various segments of exporters, we heard several heartbreaking accounts of how containers spent several months in the ports just waiting to be shipped, resulting in loss of perishable goods or well-established foreign customers. If we are to attain our goal of $200 billion in non-oil exports, then we can neither ignore nor wish away this problem. We must confront it head-on and provide a solution. That is the reason we are today throwing a challenge to all state governments that have existing ports and are willing to partner with the Bankers Committee to establish not only a dedicated export terminal, but also the entire ecosystem of a world-class infrastructure needed for non-oil exports. We believe that this dedicated port will be capable of creating over 100,000 direct and indirect jobs and will provide a huge boost to our quest for significant improvement in non-oil export earnings in Nigeria.
There is no doubt that the CBN has learned a lot of lessons from the several rounds of consultations it has had with non-oil exporters. As a result, the Apex Bank believes that instituting a more formal, predetermined and regular forum becomes imperative to discuss the issues, challenges and opportunities in this segment of the economy. In recognition of the desirability of this ideal, the biannual Non-Oil Export Summit was introduced as an anchor of the RT200 FX program. Such is the high premium placed on this anchor that the inaugural edition of the summit is already slated for the first week of April 2022. The inaugural edition of the biannual Non-Oil Export Summit is expected to bring together all the relevant stakeholders in the export business. These shall include bankers, officials of the Nigeria Customs Service, the Nigerian Ports Authority, the Nigerian Export Promotion Council and clearing agents. Other stakeholders expected to attend the summit are cargo airlines, shipping lines, logistic companies and insurance practitioners.
This gathering will be one where for every complaint, problem or issue, challenge or difficulty that is presented or identified, there will be one or several agencies or practitioners that can articulate options for solving these problems. We believe that the ideas harnessed from such summit will be invaluable in helping us attain our ultimate goal of $200 billion in non-oil exports over the next 3 to 5 years.
The press briefing by the CBN Governor was rounded off with a question and answer session in which he addressed other salient issues on the RT200 FX program.
Given the role banks are supposed to play in the actualization of this goal, how do you ensure that they truly key into the FX generation, the policy now, into the market, the foreign exchange market?
You know something? The banks don't have a choice. And I said so this morning in the meeting. I said, the era is coming to an end when you, because your customers need $100 million demand for foreign exchange or $200 million, you want to pack all the dollar and pass it to CBN to give you dollar. It is coming to an end because, and I've told them at the meeting, before or about latest end of this year, we will tell them, don't come to central bank for foreign exchange again. Go and generate your export proceeds. Fund people who want to generate export proceeds. When those export proceeds come, we will fund them at 5% for you. Yeah? When those export proceeds come, they will earn rebate. That's how we can help you. Then when those proceeds come, sell those proceeds to your customers that want $100 million or $200 million. But to say you will continue to come to central bank to give you dollar, we will stop it. Or maybe if they are lucky, we say, okay, you want to come to CBN, you will only come to CBN maybe when we see the record of export proceeds you have generated. We say, okay, we'll give you 10% of it. We'll give you 5% of it. So what does that mean? You must go and join the race to build your foreign exchange from your export customers to generate FX to fund your import customers. That's all.
We saw that under the new export stimulation drive, exporters are expected to earn Naira rebates for repatriated FX. Under what terms and conditions will they earn rebates, and how timely would that be?
We will come up with a graduated format. If we find, and we're going to seek support of experts, if there is a very high value addition, high employment stimulating, that stimulates employment in that process, you will earn higher rebate than those whose value addition is lower. The same way we are trying to say, as much as possible, we want to discourage rebates for raw produce, because we know from our studies that it has the capacity of creating inflation. Everybody, because they see there's going to be a rebate, everybody runs to the bush to buy cocoa at inflated prices. We don't want that. But rather what we want from that downstream sector is that you can come and take a loan and say you want to expand your cocoa plantation, you want to expand your sesame plantation, you want to expand your cashew plantation and all that. You will get the loan. You understand? But that rebate, we may not be able to look at that, because for people to be saying so, it means that maybe they're thinking we should. At this time, we're saying no, but we'll take a look at it. But for now, it is going to be for semi-processed and processed and wholly finished products.
With this new initiative, are you now going to be paying less attention to the FPIs and rather drive this initiative, or you will have to drive the two of them side by side?
It is not an intention to undermine earnings coming from the FPIs. We are not saying that we will ignore them. They are our partners, we need them. However, we are saying that we cannot continue to put all our hopes as a country on earnings from a source that we cannot control, or earnings from a source that comes in when things are good for us. But the moment things begin to suspect that things are not good, or results are dropping, or there's some panic here and there. In fact, that is the time when we think we would have needed them. That is the time they want to run away. We cannot, as a country, depend on that alone. We will depend on it, but we will not. We should not, as a country, depend on that as a source from which we earn foreign exchange to fund our foreign exchange import obligation.
In light of the fact that bad handling, poor handling, as well as poor warehousing infrastructure has resulted in our products being rejected when exported, are there plans really to improve the warehousing infrastructure? That's my question. Thank you.
We just repositioned and restructured Nigerian Commodity Exchange. They are going to have warehouses, first-class warehouses, whether it is with the cooling facilities, everything. They will be there. There will be warehouse receipts. They will be operated properly like typical exchanges. They can do storage for you, any fee for storage. And from there, you can export. And your export will be in line with the quality and quantity that is required. You don't run into the problem of reject abroad. That is what we want to do. And we will seek everybody's cooperation to achieve this goal. I thank you all most sincerely. for your time, and good afternoon. See you again.
It's nice to have you back again. From what you have seen, it is obvious that the CBN RT200 Foreign Exchange Program is a well thought out initiative. Robust and visionary as it is, though, the program does not have or does not possess the magical power to channel the inflow of foreign exchange to Nigeria instantaneously. And neither can it solve all of Nigeria's problems in the export segment of the economy overnight. Nonetheless, it is significant and veritable first step meant to ensure that the CBN is better able to carry out its mandate in an effective and efficient manner in order to guarantee the preservation of Nigeria's foreign reserves as well as the stability of the country's national currency, which is the naira. After all, by boosting the productive and earning capacity of the economy, the long-term value of the naira as well as the stability of its exchange rate can be guaranteed. For additional information on the CBN RT200 Foreign Exchange Program, as well as accounts and other intervention programs and policies of the CBN, please log on to the CBN website on www.cbn.gov.ng. You can also call the CBN Contact Center on 0700-225-5226 for further information. Once again, we thank you for creating time to be part of today's edition. We will be back again next week with another analytical edition of the program. Until then, goodbye.